Hello, welcome to the show. Well, trading in October is winding down fast and it's looking quite positive right there. If you're looking at the month of October, we've had quite an impressive run there for the weekly closes. So let's get to the stories that set your agenda now. See, oil prices they stabilized today on industry data showing a surprise drop in U.S. crude and gasoline inventories following two previous sessions of losses on the prospect of hostilities easing in the Middle East. And we see Brent crude futures that gained about 21 cents to $71.33 a barrel. The U.S. grade, US WTI crude futures, that rose about 22 cents to about $67.43 a barrel, up 0.3%. So we're seeing the recovery from Tuesday continuing. You see stockpiles from the U.S. Fell last week, according to market sources. Crude stocks dipped by about 573,000 barrels. And the week ended October 25th, and it shows that gasoline inventories lost about 282,000 barrels, and distillate stocks fell by 1.46 million barrels. So we see that propping up the price of oil from the big drop from the previous week and on Monday. So we'll see this recovery continuing there in the oil market. Let's get a check on what's happening with FX. We see foreign exchange markets started on an active note as participants sought for funds to fulfill their obligations. Towards the end of the trading session, we see the CBN intervened, and for the NFM window, we see it closed at 1,630 naira to the dollar, up 2.41%. On the flip side, for the NAFEX window, saw a weakening there, 1,661 naira, that was a close. Meanwhile, the World Bank has advised the Central Bank of Nigeria to stop holding foreign exchange auctions to control currency. That's the currency rates. Instead, the World Bank suggests the CBN should stick to a flexible exchange rate system by creating clear and open rules for handling foreign exchange. All right, let's go to the Bank of Industry now. Has opened its application portal for the federal government's 75 billion naira intervention fund dedicated to micro, small, and medium enterprises. This announcement was made at a joint press conference by the bank and the National Association of Small-Scale Industries in Abuja. NASI's national president, Mr. Solomon Vongfer, describes the intervention fund as a beacon of hope for countless businesses struggling to access credit. Meanwhile, BOI representative, Mrs. Amina Mohammed, explains that the fund is designed to reach 75 million MSMEs, offering 1 million naira loans at 9% interest rates over 3 years with no collateral required. Now, billionaire investor and entrepreneur Mr. Tony Elumelu joined a host of global business leaders at the 8th edition of the Future Investment Initiative in Riyadh, Saudi Arabia, to discuss some of the world's pressing concerns, including high cost of living, sustainability, and artificial intelligence. Speaking with Channel Television's international correspondent, Mayowa Adeoke, Mr. Elumelu, who has been advocating for Africa's power sector, shared his insights on the opportunities and challenges with Africa's growing population that's posing not just for the continent, but for the world. Take a listen.
A doubling is projected that by 2040, 2045, Africa's population will increase from 1.4 billion to 2.5 billion, and that in 2050, 1 of every 3 young citizens of the world will be an African, will be living in Africa. What that tells me is, as a businessman and an investor, massive investment, massive opportunities, huge market in Africa, place to invest. If you flip it as a philanthropist and as a realist, you begin to see that that also is a challenge. It's a challenge because poverty is far outstripping wealth creation in Africa. We are beginning to see political instability. We are beginning to see total, some call it extremism, I call it intolerance. Now, all of this will pose a big threat to all of us. So what could be seen by an investor as an opportunity, to me as a philanthropist, as an African, as a realist, is a challenge. But challenges don't kill. What kills is our inability to fix challenges. So it's a wake-up call. All of us, we must do something. We must create jobs. I can never it can never be emphasized.
All right, now to our first conversation. Experts say family businesses are the backbone of many economies, accounting for a significant portion of global GDP. However, ensuring their longevity and success across generations is a complex challenge. Well, joining us to unpack this is Oyinkan Akinyoshoye, is the Chief Operating Officer, My Family, My Business. Joining me via Zoom. Great to have you on the show.
Thank you for having me.
So what would you say are the key factors, influencing family business continuity and multi-generational wealth? Because right now we're seeing, economies are struggling right now with high cost of living, inflation, depreciating currency, in these parts. How are you seeing that?
So, the main issue is really governance structures. So and by governance structures, I mean the rules, the processes, the framework behind how the business is run. What are the structures that are in place to make sure that the business maintains accountability and transparency? Those in many cases are not lacking. So there's a desire to pass on wealth, but there's no real structure in place for helping to pass on wealth. So in a governance structure, for example, you have a family constitution, which lays out your family values and beliefs. You have a family council, you have recurring family meetings. And in order to do that, in order to pass on wealth, there needs to be a clear understanding on how this is to be passed on. What is the succession plan? That many times is lacking. So to answer your question, I think that family governance structure is what is key to make sure that things move on.
Looking at, the governance structure, but with all the, economic headwinds at this point, how hard is it getting, passing on wealth in this kind of economy?
I don't think it's a function of the amount. It's a function of the process. So whether I pass on 100 naira or I pass on 5 naira, it's still the same. Have you planned for it? Do you have a will? What do you hope to pass on to your next generation? I think that's the question we should be asking ourselves. It's less about what you have, and it's more about the processes you've put in place to pass on what you do have.
And how do you think family businesses can balance tradition and innovation to actually stay competitive? I saw a report recently from I believe it was Money Point, talking about how these family businesses are doing so well and contributing to growth and the GDP of most of the economies that they operate in.
So in many cases, it's like almost sometimes a competition between the old and the new, but that's not what it is. It's understanding and respecting that each generation has something to bring. So the old generation has tradition, has values, has culture, and with it comes honesty, accountability, and trust from the public and credibility. That's on one side. And then the other side for the next gen is innovation, the ability to adapt to new markets, take advantage of economic trends or technological advancements. And I think it's a matter of each party respecting one another and being able to marry both to understand that to have a real multi-generational company, there needs to be a multi-generational workforce. And that's really important in the times that we're in now, to balance both.
And, talking about the times that we're in now, do you think it's okay for the new generation to say, you know what, let's do away completely with what, our predecessors were doing before, and let's just carry on with what's trending right now?
Oh, no, because they have laid the foundations for us. They have, once again, culture is so important. Values are so important. That basic foundation is so important. In fact, that is what a lot of consumers and customers look at when they look at family businesses, is that sense of trust, because you can identify with a family business. You have a family as well. So in many cases, it endears you to them. It makes you look at them as though it were yours. So family businesses have actually an advantage over non-family businesses. And if we're able to see that advantage and use it to its best ability, I think that we can win.
Now, how do you think, some of these businesses can protect their brands from becoming dinosaurs?
By dinosaurs, you mean?
Yeah, just, being old, in the business.
Okay, so I think the main thing here is being nimble, having a nimble structure. Is the way you've structured your business, is it able to adapt to the changes? So technology is constantly changing. For example, AI. How is your business responding to the changes in these times? AI is a big thing now. Have you looked at how to include it into your business processes? And there are other things that are going on in the world. Climate change is a big thing. How are you responding to that? What are the new market trends within the country, within the continent, and outside the continent that may or may not affect your business? I think that's understanding that innovation is key to making sure that the business remains sustainable is the way to go.
You did, mention governance structures before, but let's look at how, family councils and trusts, the role they play in ensuring long-term success for the business.
So a family council stands as an overarching board to make sure that the family values and the family constitution is properly followed. So it's really just like another business within the family. What you want to do is make sure that this trust stands in a way such that it can be the pillar for the business and make sure that going forward whether there's conflict, whether there's a challenge in the business environment, whatever it is, the business is able to stand through that.
Now you did, talk about it's not what's passed on, but the process and the structure set, in passing on wealth. But how do you think family businesses can manage conflict and maintain harmony across generations? Because you have instances where there's still structure in who gets what, but there's still disharmony.
So the basic is talk, communication. We sometimes take our family members for granted, but talking through it helps a lot. And also, when you are not unable to reach a mutual agreement, it is important to invite a mediator, whether it's someone that you know or an outside organization, to come in and step in to help bridge the gap. There's nothing to be ashamed of when it comes to asking for help. I think that's really important. And also outsourcing whatever role that may be contentious. So if you realize that there's a business function that another non-family member can play, it may be a good time to hire someone else outside the family.
Now, talking about hiring someone else, we keep talking about succession plan because we've seen most businesses fail because they're not able to, get who's going to take on the reins of responsibilities, next. So what strategies can family businesses employ, to, help mitigate that risk and also foster entrepreneurial spirits, for the business?
So I think one thing is to diversification, encouraging transformation of existing business lines and also creation of new business lines, understanding that a business cannot function in perpetuity without growth. Having a culture of innovation and growth, it helps a whole lot. When people know that my ideas will be heard, they may not be implemented immediately, but they will be heard. And many times, if they're not implemented, there's a good business case for it. I think it's really important to establish that culture of innovation, of growth, of adaptability, of fluidity, and having a workforce that is able to bring new ideas and new ways of doing things can help with that.
Now, what kind of policies do you think we can, see from the government to help, keep these family businesses, going in the foreseeable future?
I think one way would be not even just loans, more support for family businesses, because right now family businesses add about 50% to the GDP. They account for about 50% of our GDP. I think encouraging family values, encouraging a specific way of raising people. We need to go back to our roots and look for our traditions and our values and build each person individually and encourage businesses, encourage business in families, maybe even have a campaign of sorts. I think that will help a lot.
All right, we'll definitely keep tracking to see how much these family business, keep adding to our GDP. Thank you so much, Oyiko Kinyoshoye is the Chief Operating Officer, My Family, My Business. Thank you for sharing your morning with us.
Thank you for having me.
All right, so it's still earnings season right here and all over the world, but I'll be analyzing results from Nestle, Seplat, and Transcorp PLC. That's our next discussion. Just stay with us. All right, let's look at some of the earnings coming up. They've been pouring in so far, and we see the likes of, for the first 9 months, Nestle Nigeria PLC recorded a pre-tax loss of about 255.38 billion naira on the back of a significant increase in finance costs. And we see Seplat Energy, they released its unaudited Q3 2024 results, reporting 532.15% year-on-year growth in profit before tax. That's for Seplat. Then for Transcorp PLC, we see the 352% year-on-year growth in profit before tax. That rose about 34.566 billion naira. Well, joining us to analyze now, we have Mukhtar Mohammed, he's the CEO, Finance with Mukhtar, joining me via Zoom. Great to have you on the show.
Thank you, Lani. Always a pleasure to be on your program.
So we see the results are pouring in right now. Looking at Nestle, what is the performance, telling us about doing business in the consumer goods sector?
Well, Lani, you and I know that it's going to be tough in that sector. The results from those sectors are same for every of those companies. When you're talking of Nestle, or whether you're talking of Nestle or you're talking of Cadbury, the consumer goods sector has just been steady in terms of results. And when I talk about steady in terms of coming up with negativity in terms of results, earnings per shares have been negative, lost about very, very high. And you know what is driving all this? It's just cost of sale, which also have to do with FX. So it's a very challenging time for the consumer goods sector. If you look at profitability, the profitability is still there. That's a good thing. So it's just the cost of sale, and this is largely driven because of the FX volatility. And hopefully, very soon, begin to see some stability in the FX space, and also we'll begin to see them coming out of the wood, especially in terms of shareholders from. Most of them are in the negative, and so it's impacting on their businesses. And that's why you are seeing the big cut in terms of cost of sale. And then the FX challenges are still there. So it's not just the ordinary Nigerians that are suffering from government policies. You can see that the conglomerate also are suffering.
Right, and how are you seeing, this impact as investor sentiment, towards the stock? What are you seeing, in the short term, following this result for Nestle?
Well, on the short term, for Nestle and any consumer, you expect negativity. I mean, you expect investors to look for safety. But a lot of investors depend on their perception and depend on their investment group. Some investors will still be looking at that space as regard long-term future. And some investors are dreaming of owning some of those stocks. So when they are down, they are still buying much of them. So I think it all depends on the investor group. But in the short term, market response are negative. You don't expect that to change because, again, when you look at the quality of equity in the market and the price by those that are losing, you really want to know that you really want to look for the qualities of good stocks that are still doing well and they are not losing and they are not bleeding like some of these conglomerates. So definitely in the short term, I think negative, but in the long term, like I keep saying, that profit is still there. It's just that cost of sale and this is largely driven by this FX volatility. Hopefully, as we stabilize, as we drive that to a stable point and we see it come down relatively, then we can begin to see profitability in some of this equity. But like I said, It's a long-term process. For the short term, it's not looking good.
Right, and we keep talking about FX losses, when we're looking at these results. And it almost seems like if the Naira strengthens, right now is going to save us a lot of headache when it comes to the price of PMS, when it comes to, most of the inflation, that we see now and the results from most of these companies. What do you think we should be doing in the short term to actually really strengthen the Naira
Ladi, it's becoming like a broken record when we keep saying to strengthen the Naira, you need to also take a bite of your revenue. You need to also look at government expenditure. For me, I think the government seems to say one thing in one hand and do another thing. And one of those things we still saying it. We keep saying is the removal of tariff from household consumables. Up to this moment, we've not seen that come to the light, to see that seeing the light of the day. Also, we thought that the crude oil, Naira to crude sale, will see a reduction in terms of volatility and also a reduction in terms of demand for FX, since from the data I got from CBN said that 40% of our FX pressure is driven by importation of refined petroleum products. But we are not seeing that there. If you listen to Dangote yesterday, even the marketers, the NNPC, the marketers, the major marketers also, and also the independent marketer, nobody seems to want to take a refined petroleum product from Dangote. And so the pressure is still on the Naira. So definitely, government need to take a bite of your revenue, and also the petroleum marketers will need to look at Dangote and then begin to do business with Dangote. Then you could see those rates stabilize. As it stands now, the pressure is still on the exchange rate. Ladi, I'm one of those people that do not believe that you have a robust reserve like what the CBN is priding themselves to have, almost 40 billion, and yet your exchange rate is almost 82,000. And I keep saying the challenge is not from that autonomous foreign exchange market. It's from the retail and the guy that the SME that need about $1,000, the one that needs $500. There's so much pressure on that retail, and liquidity in that retail angle is squeezed, and the CBN is not intervening in that angle like we expect them to. The only time you see them intervene now, by the time we see the Naira almost hitting 2,000, you see them rushing liquidity to the people change. So I think they must come up with their strategy and make sure that you don't just keep money in the bank and then you are priding yourself to build a robust reserve, and yet your Naira is suffering a lot of battle in the market.
You know, because it's quite interesting. I remember before now, it was all about, fix your refineries so that you can actually have domestic production, and that will somehow reduce the pressure on the Naira, and we can get, affordable, energy. But it seems from what Dangote said, they're not buying, his products at this point. Well, we hope that changes, very soon. But, let's look at Seplat now. They play in the oil and gas industry. How did the exchange rate depreciation impact the result? It seems it was a positive, for them.
Yeah, Ladi, so Seplat is positive, very positive. If you look at the results, the cost of sales a little bit high. Also, your revenue was good, gross profit was good. I think they tipped the balls, increment, about 20% increment in their dividend payout comparable to last dividend, interim dividend. So fantastic results, but there's a little bit challenge if you look at the results in detail. The natural gas sector suffers some dip in terms of production also, and that is the new energy. That's where even Nigeria itself is talking about CNG. And so I think they will look at that space to see how they can improve on that, to make sure that we begin to see them meet up production, especially in the natural gas sector. Also, when you look at this result, remember that this result does not factor in their recent acquisition. So hopefully, going forward, Seplat is a stock that most investors will definitely be looking at. The impact of the market, I think the market had already priced in what to expect. There was no serious market impact on it. But I think we're still buoyant going forward, especially when this acquisition is completed, which they said it's already completed, and we begin to see its impact in the bottom line of Seplat. So for now, I think most investors also are looking at the price. But Seplat has even done better than the entire market. If you look at the entire market, I've done about that. Seplat have done about 146% in terms of price increment, even above the petroleum sector's major players. So definitely, I think it's a stock that a lot of investors are looking at going forward because of this acquisition. It's a full holding, full oil and gas company, if I may. all its subsidiaries are listed compared to others that just list up the marketing arm of the downstream. All is said, the only thing that we say Seplat is not involved in refining of petroleum product or sales of crude oil. And I think going forward is a good stuff for investors to look at.
All right, let's look at Transcorp PLC now. Impressive 352% year-on-year growth in profit before tax at 34 billion naira. So what do you think drove this impressive result there for Transcorp PLC? And do you think these results will play into a positive close for the market today?
Definitely, Ladi, it will. Again, what I like about this result is driven largely by their power sector, which profit about 84% of the profit came in from the power sector, which is telling you that sector is beginning to look very, very fantastic in terms of sales. But again, the cost of sale is still a major challenge there. This is largely driven because of cost of fuel and natural gas. And also that is also, remember this Transcorp PLC, that means we're talking about their other hospitality businesses might have a negative impact on them because of the cost of fuel and natural gas. So as like you rightly said in the first time, until we bring stability to that oil and gas space, we might continue to see these things play out. But it's a very good result. Coupled with the share reconstruction, it has made it very, very in terms of earning per share. Earning per share is huge, and so that means investors who are investing there will be thinking of getting large dividend payout. But again, mustn't forget that this is a stock also that has peaked. It has grown in terms of leans and bound last year about 666%. So definitely we are not surprised at what we are seeing. But like I said, what I like about the result is also because of that growth that is coming from the energy sector. And also what I like about the result also is also the shareholders fund also increased by 34%. It shows that it's a strong, very liquid stock. So once you begin to build shareholders to retain earnings and also through profits, and then you see a company that have a lot to offer.
All right. So much to unpack there. Definitely, Mukhtar. But we'll see how the market reacts to most of these results that are out now. It's Mukhtar Mohammed, CEO, Finance with Mukhtar. Thank you so much.
Thank you for having me, Dad.
All right, so the market is open now. We'll see how it closes today. Maybe we might get some kind of snap. That's for the losses we're seeing this week. Thank you so much for watching. I'm Ladi Williams. I hand things over now to the Sunrise Daily team.